Hello and welcome to Finextra TV. I'm Alex Slipich, and joining us for part of our 2026 Predict series is Adam Tait, General Manager, Specialised Finance at SBS. Adam, it's great to have you here with us. Thank you for joining us.
Thank you.
Absolute pleasure. I'm going to start by setting the scene, if I may. Why do you think 2026 is going to be such a critical year in terms of risk transformation in B2B fintech, particularly in asset and dealer finance?
I think what we're seeing in 26 is a convergence of structural pressures that are related to the industry, particularly dealer finance. So if we talk about credit, regulatory, technology, all of those things are converging, and really risk platforms and sit at the centre of that convergence. Particularly, I think we consider the technological advancements that are now available and driving market behaviour and sentiment. It's never really been easier than it is now to integrate, to use advanced analytics and near real-time data. So I think the key thing is that delayed visibility is no longer unavoidable, but rather a design choice, and I think that's something that everyone will need to come to terms with.
Well, thank you very much for setting the scene. Really interesting insight. I'd love to know what you think are the key deficiencies within today's risk systems in asset and dealer finance, Adam.
I don't think any of the existing risk platforms are necessarily intrinsically bad. They're just a design from to manage a different operational rhythm than we're used to in these days. So typically you're going to come up against latency issues where the timeliness of data is not where it needs to be now in order to get early insight and to allow early activity. You're also going to get fragmentation. Risk for credit, liquidity risk, asset risk is typically managed across different systems and workflows, which creates blind spots. And then explainability, I think, is a key requirement of supervisors and regulators now. Typically, legacy platforms are more difficult to meet that need from regulators to be explainable because they're built over time, and it's more about the output and the outcome rather than it is how that outcome is reached.
You've touched on the systems and how they work. We talk often about user experiences. How have user expectations changed in B2B fintech specifically, and what kind of impact is that having on providers?
I think it's shifted in quite a practical, positive sense. There's a real need for confidence and trust in data and risk platforms rather than scale necessarily. Timeliness is obviously key. Users and businesses need to get the data when they need it, not at reporting time, where sometimes it's after the event and too late. Also, from a clarity perspective, it's really easy to swamp users and businesses with data, lots of reports. But what they're looking for now is clarity, where you provide a curated dashboard that explains something's happened, why is that important, and then what decisions it should inform. And that's, I think, as a user myself, really understandable. And the next thing I would think probably it's shifted towards a need for consistency. Because there are so many routes to data, when a user or a business asks a question, they want to get the same answer, whether it's from an API, whether it's from a UI, whether it's from a report. And if you don't have that consistency, it erodes trust, and you tend to get people building solutions outside of that, which just adds to operational risk and cost, I think. So the challenge for the vendors then is to be able to deliver trusted data and risk platforms, but at the speed that modernity requires now.
What should firms prioritise in asset and dealer finance to remain competitive, especially over the next 12 to 24 months, do you think?
I think it's focus more than anything, and that in two places. I'd say there's a need to upgrade risk platforms in order to leverage the technology that's available now. We need a plan to take us to the cutting edge solutions from those legacy batch-driven type legacy risk platforms. But then I think really important for firms is to get deliberate around how they work with partners. the volume of data, the complexity of an analysis, the tools that are out there, the integration, it's not possible for a single company really to augment that themselves. And I think the really smart businesses that are going to be resilient and competitive are those who build an ecosystem around themselves that they can layer up data to reduce risk and manage risk.
We'll see how that ecosystem evolves over the next 1 to 2 years. But in the meantime, it's been a real pleasure speaking with you. I want to thank you for joining us, and I really look forward to speaking to you again, Adam.
Thanks very much.